This is the earnings special on Bloomberg Quint, and we're taking stock of earnings from Titan Company. Well, the earnings were largely in line with expectations, and as the management had indicated in the quarterly update, there has been a moderation in its largest segment, jewelry sales. To take us through the earnings as well as what we can expect going forward, we are in conversation with Subbu Subramaniam, or the CFO of the company. Mr. Subramaniam, good morning and thanks for joining us. Let me begin by asking you about jewelry sales right now, because there was a suggestion that because of higher gold prices, that has kept customers at bay. But even from the 30th of June, we have seen gold prices rise even further. What is the traction based on that, sir, and what can we expect going forward?
Well, high gold prices have definitely impacted sale from the second half of June. We were clocking something like a 20 to 22% growth till the first half of June for the quarter I'm talking about here. Okay, and suddenly it sort of crashed in the second half. There was a decline actually, and that trend unfortunately continued in July as well, for the whole of July. Now, only towards the end of it, and maybe now in August, we are starting to see some sort of revival. Okay, so it has been a tough. We are hoping that August just turn around and September gets a little better. But clearly, the impact of what we've seen so far is going to hit this month, this quarter for sure. And it's only that second half, based on this, we are assuming will be based on also our surveys that we've had on consumer intent. We are expecting second half to be much better, so we are planning to meet our targets for the second half. But
okay, all right. So let me ask you about September, since you've already spoken about it, because we are reading about some planned initiatives in September. That is one part, and the second part is that should we see these? Is it just a function of higher gold prices, or is it also because of that there is a slackness in terms of demand sentiment from the customer's point of view? Is why there is a moderation in the industry as a whole?
I would think it should be both. I agree. It should be not just gold price alone. Gold price definitely impacts this business more, but I think the overall sentiment also could be an issue that we are all facing, and therefore it's likely that it's compounding. The fact that credit itself is an issue now. NBFCs are in trouble, and therefore credit lending, therefore EMIs itself to other businesses, etc., are an issue. Is, I think, a factor of all these things that we need to look at. So it could be the general sentiment. It could be that very clearly, but we'll have to wait and see. But gold price clearly has an impact on the jewelry sector for sure.
Okay, all right. So I also want to talk about watches, and of course that had very good growth coming through, but there was also partly on account of a large institutional order from TCS, and a part of it, from what we understand, is still to come through and show up in the second quarter. Am I reading this correctly? And secondly, even if we leave this large institutional order aside, in terms of normalized growth for watches, what can we expect?
I think the growth, despite, even if I were to take out the TCS, was about 13% or so, which is not bad at all. I think for a segment like good. So we are quite hopeful that the watches will generally be okay. Will sort of in a way buck the trend to an extent. It's helped by July has been a little soft. Having said that, okay, it's been softer than the previous months, but it's not bad. So we are still growing, and I think watches is something, and for that matter, even eyewear, we are hoping that we should be able to go ahead with our plans for the year. it's in jewelry where the concern is now.
Okay. All right. So the role that Ind AS plays when it comes to higher depreciation and higher interest costs for that matter. So could you just simplify for us what impact this has had on operating margins? And if we actually remove this aspect, does that mean that operating margins have remained slack? If you could give us an idea on this one as well as the outlook going forward.
See, Ind AS actually, Ind AS 116 has not impacted our PBT much. Our PBT for the quarter was down by about 2 crores, and I think it would be the case for the subsequent quarters in the year. So about 7-8 crores would be the impact for the year. Now, obviously, what it does, because the rental charge is lower, whereas the depreciation and interest is higher. But I think the way we see it is that on a cash basis, it doesn't make any difference. Okay, so the good news is that it doesn't impact PBT so much. So we are fine with that.
Okay, Mr. Subramaniam, we'll leave it at that. Thank you so much for joining us and wish you the best for the future. Thank you.
Okay.